Hey guys, in today's video, I'm going to talk about 4th of July's crypto liquidation since the day FTX collapsed. We'll discuss what's going on. So Ethereum is now trading lower than what it was with Ethereum approval announced. Does it make fundamental sense? No. I think it's because of the positioning, low liquidity, and liquidations. Basically, large liquidations happen in the crypto markets around market bottoms with the mean reversion effect, basically. I think what's happening is the move was driven by opportunistic shorts of liquidations on a market holiday, but it's also more or less part of the summer seasonality in crypto. So, what I have to say about this is equity markets are trading at record highs, and we still haven't had the following catalysts, like the first Fed rate cut, U.S. presidential election, FTX distribution to creditors, sustained interest from retailers, fraud devaluation. So none of these happened yet. So we're not at the end of a bull cycle. So in a bull market, we have to wait for the panics to accumulate the coins we want. So the big panic occurs a few times a year and allows you to buy coins at a very deeply discounted rate, like you see today or yesterday. So crypto by the numbers is pretty interesting because L1 as a category is 77%. And if you include stable coins, then only 15% of other tokens make up the total crypto market cap. So that means that it is still an L1 narrative and thesis. Basically, all the value lies within the layer ones. And if you think the reasons why, well, there's a couple of reasons why. Traditional funds don't like to invest in tokens that have a lack of infrastructure, lack of security, lack of tax, obviously for a lot of reasons. So institutions only now have vetted Bitcoin and Ethereum. Next is the token value distribution is a fundamentally different form of delivering value to shareholders compared to traditional industries like equities markets, where you use future cash flow, current cash flow, and future PE earnings and stuff to determine if a company's growth stage or not. In this case, because we have tokens that tokens in crypto are the ways to capture and distribute value. They're discounted because how well can they actually distribute value? Because it causes legal issues. So another thing is, if you look at the previous bull cycle, 90% of the projects went down. I mean, a lot of projects went down 90%, and only a few of them were winners. And so the winners are the L1s, essentially. So in this case, what is kind of like the safe way to play it? Well, getting exposure to Bitcoin and Ethereum and light exposure to speculative markets. But even in this case, I don't believe in that. I believe in just Solana, Ethereum, for example. With that being said, I also believe that if you look at, there's a report I read the other day from Grayscale, which is Artemis Grayscale Research, which shows you what coins institutional investors are considering as viable investments. And some of the assets that Grayscale has published were Bitcoin, Ethereum, Solana, Uniswap, Near, Maker, for example. And I think Uniswap is good. It's an OG DeFi protocol, which may be able to turn on the fee switch in a better regulatory environment, but this is still bearish because, again, we have to figure out the tokenization structure and things of that nature. So I think the execution is just to continue DCing and buying Ethereum and buying Solana and buying Ondo. There's crypto seasonality, which happens in summer as well. So I think have them in hands. I'm not shilling you something. I'm not saying this is a scam. These are institutional grade assets that have new technology, brilliant leaders. So with that being said, I highly suggest you guys to purchase Ethereum, Bitcoin, Solana, the top 3 coins. This is not financial advice. It's just my opinion. Thank you guys.